You've hinted, David, that the market is different than it's been in the past. How would you characterize, let's focus on, we're in the South Loop, 621 South Plymouth. The immediate market, the South Loop market, how would you characterize it?
This has been an active and fairly stable marketplace. South Loop's a big place. We're specifically in the Printers Row neighborhood, and that is a well-defined, specific area. And people who want to live here there's more and more new construction here, but there's a limited amount of housing. And so the volume here has been brisk. We have a lot of resale property that I think is fairly priced. And one of the things that I think has been an advantage to being an agent in this marketplace in terms of selling is the fact that the condominiums, most of the housing stock here, almost all of it's condominium. They're older, but that means in general they're larger. There's a lot more space. And you know, I've observed a trend towards, by the average consumer being willing to settle for less space and a higher end finish, but I'm starting to see that go the other way a bit, because as with people are starting to evaluate pricing a little bit differently. And I think that you also, over time, people who were in older units have now come back around and invest in some new capital there and brought those finishes up a little bit closer to what maybe is available in a new construction unit. But space is something you can't recreate.
You're not seeing here the kind of price drops that have been seen in other
We
markets?
We have not seen any real price drop here. I just saw some statistics today from appraisal research about that were taken from a Case-Shiller study, and which looks at the 20 most active urban marketplaces in the U.S. Chicago has given back most of the price appreciation it has had since late 2004, early 2005. So in other words, we've had some decline in average sales price. However, if you look at most other large urban marketplaces, you know, for example, Las Vegas, on the extreme other end of the scale, has not only given back all that it gained from 1999 to 2006, but it has given back more than that. So whatever the total value of property was in terms of appreciation, that is all gone, and now there's an additional decline in price there. And we just haven't seen that.
Chicago isn't relevant to me, or I wonder how relevant it is to anyone. We see this all the time on YoChicago. People talking about Chicago, and it's the South Loop that matters, or Lincoln Park if that's where you're interested, or the West Loop.
You're absolutely correct.
Yeah.
You know, it's market to market. You know, when somebody says, "Well, what's the pricing like?" It's market to market, and it's almost day to day, because if you the statistics from the Illinois Association for the second quarter of this year that they've come up with now, the last running 3 months, we're showing a 15% increase in median sales price for condominiums in Chicago. And
with sharply reduced volumes.
Right.
Sales. Yeah.
With volume off 25% or more. So you go, well, how has that happened? If you really have to drill down deep into the numbers, because that isn't true everywhere. I mean, there are neighborhoods in Chicago where the average sales price has declined probably into double digits. But there are other areas of Chicago where it just hasn't happened. And in general, when you start to look, it comes down to the same criteria: location, location, and location. Where there's an active demand for property, and in general, that would also mean that there is a higher sales price. Those markets have been the least affected.
What about
it's the emerging markets that are where it's emerging areas. It's areas that have just begun to see significant investment in new construction, housing, and infrastructure. You know, the creation of retail areas that weren't there before, that are designed to draw in a new population, or if the housing stock got created first, and then that new housing stock owner draws the attention of a Starbucks or a local restaurant or some type of retail. Those areas where that's new, those are the people that are, that's where the momentum has really died out. And I think that's where, and you're seeing, and that's where you're starting to see some significant declines in price. And also areas where there's just so much housing stock that was put up in anticipation of what had not yet happened. The absorption rates right now in the South Loop, for example, on some of these high-rise projects, very, very low. The traffic in their sales centers, according to appraisal research, for the first quarter of this year are less than half of what they have historically been there, and they are converting buyers at only 50% of the success ratios that they were at before. So that means, basically they're getting about 25% of the business that they were getting before. Their sales volume is going to take a long time for some of these buildings to sell, and yet here, on average, the prices are holding well.
There are buyers out there who react to this by saying, well, I'm just going to wait and wait for the pain to get worse and see if I can buy at a lower price. Is that a realistic approach, or?
If I had a crystal ball, I don't know, I might be sitting here, but I doubt it. I think that in terms of price, when you look around the marketplace, in Chicago and the metropolitan area in general, that prices are close to, or not, if not at the threshold for where they're gonna settle. Certainly there's foreclosures and short sales are going to push down price points on specific properties at a given point in time, but they're not going to drive the pricing of a whole neighborhood down. Unless a significant portion of that neighborhood is in foreclosure. If there are
we have neighborhoods like that in Chicago.
Yeah, we do.
South side and the west side.
But if you look at those neighborhoods historically in terms of the total volume of sales there versus what's going on in the rest of the marketplace, they're not an insignificant fraction, because anyone who lives there certainly is feeling that pain you're talking about in a real way. But on average, roughly 3% of the homes are going to end up in foreclosure as a result of issues around subprime lending. That's not a really big number. Now, if the economy goes to hell in a handbasket, I don't know then. But right now, I think what we're seeing, and one of the reasons why we believe the inventory in the marketplace is continuing to stay high, is the average home seller is getting to a place where, whether it's the developer who has a bottom line that he's got to make, they're not in the business to write a check back to the bank for $1 million out of their own pocket. They may lower the price of their new construction product down to a point where they have a very thin profit margin, or maybe no profit margin at all at the end of the day, but they're not going to give it away. And the average home seller is not going to do that either, unless they have to. I mean, do I have to move? Is my job changed and I can't afford where I'm living? But otherwise, what we're seeing is people just get to a place where this is where I think is fair, and I'm willing to sell my house today if someone can come close to this number, but otherwise I'm not going to sell it. And we're still seeing, when you look not only at our numbers internally, but at the numbers in the MLS, average home sale probably around 95% of list when it's said and done, the closing sale price. Now, looking at the property history of being on the market, whether or not that list price at the point in time it went under contract is the same as when it actually went on the market the first time, that's a different conversation. But houses, when it gets close, the values consumers are seeing the value and they're willing to pay up close to list price. It's not like the average guy is running around saying, I think if the average person is running around thinking they're going to buy a house for 80% of what it's listed for, and that price is fair, they're not going to get that house.